Alright kids, story time. So today's story is going to be very interesting. Please watch it till the very end. There are massive learnings in it. So if like me you enjoy history, finance and stories, you would love the next 10 minutes. Now before we get the story started, I'm not just going to tell you the stories and the lessons out of it. I'm also going to explain you how a similar story could play out in the modern world. So please stay tuned till the end of the very video and please like this video so that it reaches more people. They also get to hear fascinating finance stories and there is more financial literacy in the world. So let's get this story started, and there are three parts to this story. So the story starts in Dutch Republic and we are talking about the period in the 1600s. Now from 1600s to 1720, Dutch Republic had its golden age. The way India had its golden age before the Britishers came and robbed us, similarly Dutch people had their golden age from 1600 to 1720. This was a period of massive progress for them, from politics to economics to finance, especially finance. For example, they formed the first stock market of the world. They also structured something called as futures contracts. So you might have heard that there are a lot of F&O traders these days. They make a lot of money in the stock market and whatnot. What was the point of origination? The origination point was this golden period in the Dutch Republic. So let me quickly explain what future contracts are so that rest of the video is easily understandable. So future contracts in simple terms we can understand by picking an example of Bitcoins. Now, many a times you would have heard that Bitcoin is a speculative asset. So essentially, futures and option is essentially a speculative instrument. So let me break down this for you. So for example, if you believe that, hey, you know what, Bitcoin is going to go up, I am on the fence, I don't want to buy it, yet I don't want to lose out this opportunity. I somewhat believe in the Bitcoin story, but I'm not completely convinced to spend my money on buying Bitcoins as of now. Then what are your options? You would essentially wait for, let's say, 6 months or 1 year, and then you will check that, hey, if the Bitcoin prices have gone up, probably it's a good market, then I will invest. But the problem would be that if Bitcoin, hypothetically speaking, it's trading at $100 today, then 6-8 months now, the price might be $150. Then you will lose out a lot of money just waiting around. So what you would say is that, you know what, Akshat, I somewhat want to buy Bitcoin, but I want to test out the waters and wait for a few months before I buy Bitcoin, but I also don't want to take a loss. What if the Bitcoin prices go up? So is there a system for me? So yes, there is a system. It's called as future contracts. So very simple explanation here would be that let's say that we are sitting in September of 2021. You say that I want to do speculative trade, that I want to buy a futures contract on Bitcoin, and if the Bitcoin is trading at $100 today, you give me the option of buying Bitcoin in December at $100. I don't care what the price would be. Then I would say that, okay, sounds good, but I want some kind of a premium on it. You will give me $2, I'll take that premium for you. And in December of 2021, if the Bitcoin prices are, let's say, 110, I will have to give you that Bitcoin at $100. And you make money from this. So this is a very simple explanation of what future contracts are. There are multiple nuances to futures contracts, so we'll not get into that discussion as of now. But I hope you get the picture that you can lock in the prices today by signing on an agreement, paying a little bit of a premium to this future contract seller, and you lock in the prices. And then you feel safe that, okay, hey, let me monitor the performance and then I will make a call after 3 or 6 months whether to buy this asset or not. Now this same concept, instead of Bitcoin market, because now we live in a modern world, but back in the 1600s, Dutch people were talking about tulips, which is a beautiful flower. Still, if you visit Holland, you will see big gardens that Dutch people cultivate and they plant tulips in that entire field. Literally, the way we plant sarso in India, they plant tulips in their garden. A lot of Bollywood movies and Hindi movies have been shot there. So this brings us to the part 2 of the story, where these Dutch people back in the 1600s started playing with the futures contract of tulips. Now, what was the fascination with tulips? This is a very important point for us to understand this story better. So essentially, Dutch people were drawn to tulips the way teenagers are drawn to mobiles these days. They just literally adored tulips. Now here is a picture of one of the tulips. Now this tulip was called as Viceroy tulip and it was selling at 3,000 to 4,000 guilders. And essentially you can buy a house in Dutch Republic with approximately 5,000 guilders. Now this tulip, this small little flower, was selling at 3,000 to 4,200 guilders. Now your question here would be that, hey, you know what, Akshat, why would Dutch people do something this crazy, right? Why would they buy a flower instead of buying a house? Now there are essentially two reasons. Reason number one is that tulip represented beauty. It represented elegance. So it's like owning a Mercedes these days. Now, of course, if we are sitting today in 2021, you can buy a Mercedes for 60, 70, 80 lakhs also. Similarly, you can buy a house at 60, 70, 80 lakhs. People are still doing that madness. What Dutch people did back in the 1600s. So reason number one was that tulips represented opulence. And the reason number two is slightly more economics related, that tulips are hard flowers to grow, especially back in the day. They had a long gestation period. Tulips were not native to the Dutch Republic. Everyone who saw a tulip or heard about a tulip wanted a tulip. So there was a lot of demand for tulip. So essentially, whenever the demand for anything goes up and the supply is very limited, guess what happens? The prices go up. So that was the reason why these type of tulips, the Viceroy tulip, was trading at 3,000, 4,000 guilders. So these two factors led to something called as speculation. Now speculation simply meant that everyone wanted a tulip, they could not get their hands on it. In fact, majority of the people who wanted to buy a tulip back in the day, they have never even seen a tulip in their life. They have just simply heard of something called as tulip, that it was fascinating, it was beautiful, and everyone wanted one tulip. So this started the race for paper contracts. Essentially, people would go in the market and they will do what? They would buy future contracts. There will be sellers who would say that, you know what, tulip prices right now are 2,000 guilders. Would you want to book this price? I'll give you the delivery after 3 months. Then the person would hear that, you know what, my friend bought this paper contract on tulip last month and he paid only 1,000 guilders and now I'm getting this deal at 2,000. So probably next month, this tulip will be 3,000 guilders worth. And guess what? They were right. That's exactly what happened. By 1634, the tulip prices were rising sharply, and by 1636, tulip was one of the fourth most exported commodity from the Dutch Republic. This mad race for buying tulip went up and up and up. Why? Because there were people who were telling each other that, hey, last month I bought this tulip, now I gained 50% out of it. Next month, this tulip will go further. So my action would be, I'm missing out on this. I'm going to go and invest my money. So this is what happened, and people ended up buying more and more and more futures contract. At its peak, one tulip used to sell at 5,000 guilders. Now the prices can go up only up to a point, especially when some asset does not have any value. For example, this is a classic case of chit fund schemes. What happens in a chit fund scheme is this, that I will tell you that, hey, you know what, I invested in this particular chit fund and I made 10% return. Why don't you also invest your money? Then you will go and invest in that chit fund. You will make 12% return. Then you will go and tell your third friend that, hey, I made 12% return. Why don't you invest? Then he will invest. He will make 14% return. As you can see that the returns can only go up to a certain point. After that, if the asset, the underlying asset is not able to perform, it will collapse. Now, the intrinsic value of a flower like tulip is what a tulip should cost. But here we had people who wanted to exchange their house for a tulip and the market came crumbling down. Now, you might ask that, hey Akshat, what happened to those future contracts? Well, if the market crashes entirely, then there is no such thing as a contract in that. Why? Because if an asset class or an economy, if it crumbles, then there are no rules to be placed. This is exactly what is happening in Taliban right now. There is no rule of law there right now. People are suffering massively, and all the previous contracts that they would have entered on, be it on legal side, be it on finance side, it's gone. There is just nothing there. This same speculation played out in the Dutch Republic and it hit the economy. Now, there are a lot of different accounts as to how much did this Tulip Mania actually hurt the Dutch economy. The short answer is that it did not hurt much, but this is the first and one of the most fascinating stories you will hear about speculation. Now, I know that what you would be thinking, that hey Akshat, you know what? I have heard of this story. I think we are living this story right now. And that story or that asset class right now, instead of tulips in the Dutch world, now we are witnessing something similar in Bitcoins. Now, here is the argument. Actually, the speculative asset, according to me, this is my personal research and opinion, I don't feel that Bitcoin is a speculative asset. Now I can hear a lot of typing noises on the keyboard saying that, hey Akshat, you know what, you're wrong. Bitcoin is a speculative asset. Okay, please understand this viewpoint, and this is something that I've said on my cryptocurrency course also, the link is in the description, that when any asset class starts, it starts small, right? For example, stock market is this big, Bitcoin market is this big, right? It's just literally very, very small. Now, in a small market, for example, in a mid-cap stock or a small-cap stock, have you not seen stocks fall by 15% in a day? You have. So, are those stock investments speculative? There are a lot of companies which have crashed in the stock market by 15-20% in a single day and have come up. So point one regarding Bitcoin is, it is not a speculative asset fundamentally speaking. It has a small market cap as of now. As Bitcoin market matures, it becomes big like stock market. There will be more liquidity. There will be more stability in prices. There will be more value around it. If you want to check out my video on the fundamental value of Bitcoins and Ethereum, check it here. You will understand it more. But the simple point that I'm trying to help you understand is that speculation is not just increase or decrease in price rise. Speculation means that when the underlying asset has no value and people are just pumping up its prices. So this is a very important point that you need to remember about Bitcoins. Final point, what is the speculative asset that I was talking about towards the start of the video? According to me, that speculative asset is hard currencies. Again, I can hear a lot of clicking noises that, you know what, you have gone mad. US dollar will never crash. INR will never crash. Chinese currency will never crash. Okay, it might not happen 10 years, 20 years, 30 years, 40 years from now, but it will eventually happen. Why? Because there is a fundamental flaw in the economy right now. The fundamental flaw is that we come up with new economic models to increase or decrease the printing of currencies with no underlying value to it. Before we move to a fiat or the current economic system, we used to have gold reserve currencies. In fact, the central banks at that stage, when you used to back it up with gold, what were they indicating by linking it to gold? They were indicating that, hey, our currencies don't have value. Therefore, we are putting up all this gold, using it as a base on which we are printing currencies. This used to happen in the past. Now what is happening? If President X of Y country wants to print $10 trillion, they can print it. World's debt is going up and up and up. And when do you think this speculative bubble in currencies will burst? It will burst when the world's GDP will not support this increased debt. That is from a macroeconomics point of view. If you want, I will do a separate video on it. This is not a short-term assessment. This is a 10, 20, 30, 40-year assessment. And this tells you a fundamental problem in currencies as they exist in the current shape. This is the reason why I am an investor or I am taking little bit of bets in cryptocurrencies. So I hope you enjoyed the video. Would love to hear your counter arguments like always. Please keep the discussion education oriented. We are not here to bash each other. And please be aware of trollers. There are a lot of trollers. I can't control them. I have tried blocking them. Can't do much. So I hope you enjoyed the video and I will see you the next time.